Welcome back. Joining us on the show now is Amit Goel. He's co-founder and chief global strategist at Pace 360. Amit, hi. Welcome to the show. And what a great performance is what we've seen coming from the gold prices. Not so much for the Indian markets, where we still are holding around that 60,000 mark, but we've made an all-time high in gold in Australia, in Taiwan, in Japan, in China. And in this year itself, we've made an all-time high in gold in UK, in India, and various other countries as well. What's your sense, especially now when more and more people are advocating that gold is a must in your portfolio?
Firstly, thank you for having me on, Manisha. And we have, of course, been bullish on gold. In general, we've been bullish for a few years now. We gave a huge bullish call on gold in 2019, around April, May time, when on MCX it was about 32,000 rupees, and globally it was at about $1,260. But more recently, about 2 weeks back, there were several indicators which were pointing to the fact that gold is going to go up and go up pretty rapidly. So I can talk about some of those indicators, and they came flashing between, when price of the gold fell below $1,850. So we got all those indicators flashing green for gold when it was between 1,810 and 1,850. And some of those indicators were the commodity trader positioning, which is whom we call CTA positioning. The CTA positioning was absolutely oversold on gold. And we have seen that whenever the CTA position globally is as oversold as it was, let's say about 3-4 weeks back, then you get a massive rise in gold within the next few days and weeks. In fact, I remember sharing that indicator with you as well. Then the other indicator was that the position on COMEX on gold was actually in the negative. So this happens very rarely, that the speculative positions on COMEX, instead of being in the positive, they were in the negative, which means that the speculators were actually net oversold on gold.
Right.
Now, this happens once in a few years. And whenever this has happened in the past, you see two things. One, there is a short covering rally in gold within the next few days and weeks. And the other is that within the next 1 year, gold typically goes up by anything from 15 to 20% on an average. So this was another indicator. The positions on CFTC were also extremely, extremely light. They were also pointing towards a potential rally in gold. Then the ETF positioning. So the global investors have been selling ETFs since, let's say, April, May of this year. And from 94.5 million ounces, the position is down to about 86 to 87 million ounces. So not only was gold oversold technically and in the futures position, gold was also extremely underowned in the
Amit,
ETF positioning. So
absolutely, Amit, if anybody read all of those indicators well, would be sitting on quite a bit of a sweet profit when it comes to gold right now. But let's also talk about the projections now. And most banks and brokerages are talking about levels anywhere between $2,100 to $25 per ounce in the next year. What's your sense on where do you see gold prices? And also the second part is, how much of a portfolio holding should be in gold?
Fantastic. So, Manisha, we are extremely, extremely positive on gold, because the most important reason for owning and holding gold right now is that the macro backdrop has been intensely negative for gold in the last 1 year.
Okay.
So we saw dollar index going up, we saw the US is going up. So we now believe that the macro backdrop is going to shift in favor of gold over the next 1 year. Which is why it is our belief that gold, from a current price of $1,975 or thereabouts, it should move up to about $2,300 to $2,400 by same time next year. And you know that gold has been effectively sideways for the last 12 years now. It was $1,911 in 2011. And even now it is $1,975. And in this entire duration, dollar has lost its value against the CPI index by about 36%. So gold is massively, massively underpriced relative to its own performance relative to US CPI and relative to dollar index and so many indicators. So we have a target of about 2,300 to 2,400 on gold same time next year. But there is a very important caveat. And that caveat is that right now there is a certain amount of war premium that has got built into gold in the last 15 days ever since the problems started happening in the Middle East. So this war premium, in our opinion, is about 3 to 4%. So gold made a top at about $1,997 on Friday. And I believe that if you take off the war premium, then the gold price could come down to about anything from $1,900 to $1,925. So while on a long-term basis, gold is looking extremely, extremely bullish, not just for 6 months, 1 year, 2 year, 3 year, 4 year, every time frame, gold is looking extremely, extremely bullish. But
we hear you, Amit.
That right now,
yeah, we get you that there is a war premium right now, but we have been an underperformer, and gold has a big chance of going higher from here. Amit, thank you so much for joining us. So that's yet another very bullish view coming in for gold, $2,300 to $2,400 per ounce in matter of an year. But with that, it's wrap on halftime reports. Stay tuned. Business Lunch will take all the action forward.